Jean-François, I have to start with you. You and Victor, I think, have crossed swords once or twice in the past, and it is a pity he's not here in person, but I'll give you the chance to respond to a couple of the things he said, very firmly putting the blame for the trade tensions in the US, and very firmly saying the US has got this entirely wrong.
Well, thank you very much for asking this. I think in many ways I'm very lucky that Victor is not here because he's such a good spokesperson for the Chinese point of view. I'm not sure I could come close to even disagreeing with him or even fighting his points, so to speak. But I think the key issue is really the trade deficit, and it's very nice to know that China can really make some efforts, and that the trade war was started by the United States, and that certainly is true. But without the resolution of a $500 billion trade deficit, excuse me, between China and the United States, and the fact that China makes it very difficult for U.S. firms to operate in China and to sell freely in China, it's not going to get resolved very quickly. I think that many people in the U.S. want to have the trade war resolved. It is costing the U.S. tremendous amount of money. It's costing jobs. He's perfectly right about that. But the solution is really within China as well as within the United States. So in that sense, I disagree with Victor, even though his points are very well taken. Nevertheless, it's not just a one-way street.
We'll come back to that. I need to step back one moment to each of the panel and talk about the coronavirus, which is clearly dominating headlines and discussions, markets tanking overnight and the like. Very hard to predict where it might go, but David, you, in terms of possible scenarios playing out, do you expect a slowdown in growth and a slowdown in trade?
I think if you look at the outcome of the recent G20 finance ministers' discussions, the Institute of International Finance had a conference here in Riyadh earlier this week. We're having a conference today. There's clearly a consensus that there's a lot of pressures building globally. That is very, very obvious. The US-China trade tensions are one obvious flashpoint. Unfortunately, the coronavirus is another. The European Union is under significant pressures when it comes to growth or lack thereof. It was a very interesting statistic that Nolan mentioned in her opening remarks, that 70% of global GDP growth over the next 10 years, by 2030, is going to come from emerging markets, 70% from emerging markets. We're in the center of an emerging market region in the Middle East, and we've just heard from Victor Go, who's at the center of the most significant emerging markets region in the world, Asia. And so if you follow that logic through, that 70% of growth is coming from emerging markets, a big chunk of it is going to come from the Middle East and Asia. And so I can't see any scenario that enables us to have growth, and I think we're all agreed that we need growth, we need to distribute it better, we need to make sure that people are not left behind with growth, but we all need growth, we absolutely need growth. Then a big chunk of it is going to come, as I say, from the Middle East and Asia, and that's got to involve and require a level of trade growth. I'm absolutely in the camp that trade growth is good, trade is good, globalization is good. Yes, we should focus on distribution, inclusion, etc., etc. SAB is the leading trade bank in the kingdom, and we are very, very proud of our partnership with HSBC as the leading trade bank in the world. So we have a very strong and powerful self-interest in ensuring that there's growth, but I think in terms of our customers, our communities, our economies, if we can get back to a situation where we can start to see global trade increasing, we really will all benefit, and I entirely agree with Victor in that respect.
We'll stay briefly on the coronavirus, just to both of you. What sort of scenarios are you playing out, or do you think might play out in terms of impact on trade and growth?
Well, of course, no one really knows.
Yeah, that's one of the problems.
I think one of the key, and to to really focus on the region here. If the virus really impacts trade, it will impact very much the price of oil and the income of the kingdom in particular and the rest of the Gulf. And that will have some major consequences. It will also have some major consequences within China in the sense that if many companies go belly up because they still have to make the payrolls and so on, and they don't have the money because they don't sell, then there could be a major crisis because then these companies will be out of business and they will not just recover, they won't be there anymore. So that could really trigger a black swan from the economic standpoint. On the other hand, I think that probably is too negative. I think I agree with Victor that the economy in China will bounce back. So ultimately, I'm relatively positive that the bounce back will just make up for a lot of the losses. Definitely, there will be some changes within the trade with the Middle East for sure, at least for some time to come. But ultimately, I would say it will come back.
Okay. Simon, you're traveling the region. What are you picking up in terms of concerns about coronavirus and the impact on trade and growth?
Yeah, I mean, a lot's already been spoken about it, and it's hard to add over and above what's been said. Suffice to say that in a worst-case scenario, one of the stats that I've most recently read is that world GDP could be hit by up to 1.3%. And when you look, we're already in a world of increasingly sluggish growth, with the IMF revising GDP growth from 3.6 to 3. If you were to lose another 1.3% of growth in a worst-case scenario, it will have a very material impact on the global economy and by extension global trade. And just given the interconnected nature of supply chains now, it's very difficult to disaggregate what happens in one part of the world elsewhere. I mean, I was reading some stats around retailers in the UK are already anxious about supplies of stocks for Christmas this coming year, which is 11 months away.
Yes, yeah.
So, you know, it is a here and now event, but it's going to have reverberations that are going to knock on throughout the rest of the year and probably beyond.
Yeah. I mean, the overriding tensions over the last few years, David, has been the US-China tensions. Linda alluded to it, talked about it. It's dominated headlines for years, and while there does seem to be an easing because of phase one deal, it's still there. Would you expect it to flare up again either post-election, and will technology be the forefront of that?
I think in terms of the geopolitics and so on, I'll leave that more to Jean-François and Victor. And you know, the extent to which trade tensions oscillate up and down, so be it. I think the point I would make, though, I want to come back to this point about the growth of trade between the Middle East and Asia, and particularly China, but it's not just China. It's Japan, it's South Korea, it's India, it's other countries as well, Malaysia, seeing a little bit from Indonesia. And so what we've seen consistently over the last 10 years or so, certainly in terms of Saudi Arabia, and remember Saudi Arabia is 50% of the GCC economy, is we've seen a steady increase in trade with Asia and Saudi Arabia, and actually the Middle East every single year. And Lubna mentioned low double digits growth every year for the past 10 years. So it's unfortunate to see these trade tensions between the two largest economies. It doesn't do anything for the global economy. But the Middle East is on a path, and I'm sure it will continue, of increasing trade with Asia, and that's good for the Middle East, and it's good for Asia. In terms of technology, yes, it's all going to be about technology. And in some respects, what we're doing still today in the world of trade and imports and exports is kind of using systems that have been around for 100 years.
Yes, yeah.
And they are heavily paper-based. They are very, very inefficient. They take a long time. If one particular document isn't in order, it slows the whole thing down, the whole process down. So it's an unbelievably inefficient process. Distributed ledger technology is incredibly exciting for the future of trade, and I think it's going to be a huge factor in enabling more efficient, friction-free trade that will ultimately boost trade. So we are investing as fast as we can in technology for trade. I'm sure other banks and other financial institutions, and indeed all the intermediaries are trying to do the same. And the winners will be the ones that deliver that new technology platform most effectively.
I do want to come back to technology because it is a huge game changer in the trade space. But one final question on the tensions between the US and China. Do you expect them to flare up again post-election or even before the election because it plays all domestically?
Of course, it will, because in part because of the virus, China will not be able to live up to the agreement of buying, so many billions of dollars of agricultural goods and probably limit a little bit the opening on the technological side. So yes, I fully expect a big flare-up. That could be just the first step to a phase 2. But as you mentioned to Victor, the problems between China and the United States will not be improved by the elections, one way or the other. In fact, if the Democrats ever win, it's probably in many ways going to be even worse in some ways, because the present administration is tough talking and is a lot of bluster and not much action, really nothing. But the Democrats will not be any better. In fact, they will try to even be more blustering to show that they're better than the present one. So yes, I think there will be a lot more problems, and from a world standpoint, it will really impact the growth of everybody.
Yeah, because Simon, the UK is now in a position where it's starting to look at new trade deals against the backdrop of probably continued tensions, against the backdrop of sweeping technology change, and it still has to negotiate a deal with the EU, its biggest trading partner. How is that going to play out over the next year?
Yeah, well, I mean, obviously the next year in terms of the UK government's focus is very much on the future trading relationship and agreement with the EU, but also starting the process of engaging in free trade agreement discussions. The US has obviously been highlighted as one of our key priority agreements, which is very much in focus for us. But bringing that into the context of this region in particular, and sort of overlaying a bit of an Asian angle on it, if you look at sort of 20-year compound annual growth exports from the UK to the Gulf in particular, the year-on-year UK exports have grown at around 8% consistently for the last 20 years. So you could put a big tick on the box there and say trade is growing between the UK and the Gulf. However, over that period of time, the GDP of the Gulf has grown more than 4 times, so the pie has got considerably bigger. And within that growing pie, the UK's market share is more than halved. So it depends which stat you look at. Is it a good performance or a bad performance? And it won't surprise that over that same period of time, China's market share has trebled and India's has nearly doubled. So you've seen over the last 20 years very much that shift from the west to the east. So that poses the question: what does it mean for countries like the UK? And the UK is not alone in that sort of loss or erosion of market share as other countries have got bigger. Very, very similar stats for France, for the US, for Germany. And we see very much where the UK can play a role is not necessarily trying to compete head-on with, say, China and its exports, but through our discussions, particularly in the Gulf, and when we speak to the leaders of the countries, where they really look for UK expertise is around the transformation and the vision agendas that are happening. So less of the export push, but more of the partnership in terms of the intellectual capital that comes with industrial transformation. And that won't surprise you. In areas that are very similar to the issues in the UK and in the whole world is facing. How do you deal with populations? How do you deal with clean growth? How do you deal with artificial intelligence? How do you deal with tech? And the UK is grappling with those issues in the same way the rest of the world is. And we're starting to see a lot more engagement with GCC governments around that partnership and sharing. And I stress the word partnership because I think the historical model has been selling. The next phase is very much how do we work together collaboratively as partners to solve problems jointly. I think it's that way that the UK can export its services and competencies, which ultimately will benefit UK companies that are looking to do business in this part of the world, but by extension, other countries.
David, you're all bankers the first to launch blockchain, according to Lubna. Much talk about blockchain over the last couple of years. One view is the adoption hasn't been as fast as some anticipated. Do you see that accelerating because of the benefits it brings to trade, particularly in certain sort of bilateral relationships?
100%. It will accelerate, and as I said in my remarks a few minutes ago, I've got no doubt whatsoever that the future of global trade is heavily driven by technology. No doubt whatsoever. So yes, Michael, it's probably fair to say that it's taken longer than perhaps people would expect, but that's because it's quite complicated. It involves so many different parties.
Yes.
Not the least of which it involves governments and customs authorities, quite apart from importers and exporters and their respective financial institutions, etc., etc. There's a lot of documentation that is required for global trade, and if you're going to put it all onto a single platform and have all the parties engaged in that platform, it is complicated. But I've got no doubt whatsoever it's coming. I've got no doubt the pace will accelerate. And as I said, the winners, in my opinion, will be the ones that adopt the technology in a customer-friendly manner, as effectively and efficiently as possible.
Please.
I was just going to add on that, on the whole sort of the sphere of FinTech, which I guess is really what we're talking about, the sort of disruption of banking as we know it. Often, one of the big questions that was asked around Brexit was the impact it would have on the city of London. I mean, so far we've seen, in the very low single thousands of job losses, which you could arguably attribute to Brexit uncertainty. But over that same period of time, there's more than 76,000 people in the UK employed in FinTech. The disruption that is happening in financial services is going to just expand exponentially. And all the technology which David was just describing, we're only at the beginning of this journey of financial disruption and disintermediation. And that can only be good for facilitating global trade.
Yeah, some of these changes, David, are enabling smaller enterprises to get access to trade finance, which they couldn't have done before.
Absolutely. Absolutely. What we heard earlier, Alibaba and its platform helping SMEs in the UK. And technology is truly global, truly global. So back to the points around Huawei and so on, it's global, and no single country is going to be able to block it out. There's huge talk at the moment in terms of data and data protection and national clouds versus global clouds. But the fact is, huge masses of data are already out there, and it's not coming back. I think the trend is pretty much irreversible. And some countries and some governments might try to slow it in certain areas, but the long-term trends are pretty clear.
Jean-François, the technology piece is there's blockchain, there's the data element, which is a huge component, and the regulation around that is a big geopolitical as well as commercial issue. But as Lubna alluded to, there's robotics, there's AI, there's 3D printing, which is going to transform supply chains.
Absolutely. Yes, I've done some research on this, but not so much on the financial side of things. I was really more interested in the transfers of technology and the fact that, especially with Vision 2030 in the kingdom, there's an effort, especially in Saudi Arabia, for Saudi Arabia to become a technology taker from the outside, and that's very costly to Saudi Arabia in many ways. And perhaps the emphasis should be on the fact that already Saudi Arabia is an exporter of technology in certain fields, like energy, like chemicals in particular, fertilizers and whatnot. So, but for Saudi Arabia to become just a net taker of technology is dangerous, because it will really use up their cash reserves and so on. They would have to invest in new technologies, which is not really natural to the country. While they have enormous natural advantages in low-cost carbon molecules and so on, and developing the technology even much further will really transform the economy, and especially improve the smaller companies who can get involved in this. But that requires enormous amount of money in research in an area where they have a natural advantage. going into full technology as an export, to become an exporter of technology in areas where they don't have a natural advantage will be very costly. It will remind me a little bit of what happened in Latin America in the 60s when they were trying to move away from the imports of, they tried to do import substitution, and it was a major disaster. They could not afford it. So in that sense, it's not quite the FinTech. It's not at all the FinTech, but getting into technology that way, where they have a natural advantage, will be a big plus. They would have to, as the importance of oil declines, the need for technology, advanced technology, especially in chemicals and down the chain from the carbon molecules from oil, will really save the country in many ways.
Okay. I'm very happy to take questions from the audience.
Sorry,
yeah,
before
I'll come back to that.
while the audience
Questions
is
from the
thinking,
audience.
I want to pick up on one point that Jean-François just said, and perhaps ask him and challenge him a little bit. I think it's very, very relevant. So, at the heart of Vision 2030, you've got diversification away from oil, and you've got an increased role for the private sector at its heart. The Kingdom has just done the largest ever IPO in the world, Aramco. Aramco, as we all know, essentially the world's largest oil company. If we buy into the story that the globe, the planet, is on a long-term path away from hydrocarbons, which is what Jean-François just said, which I think is correct. Yes, you'll see a lot of investment in technology around hydrocarbons in the Kingdom, and the Kingdom is the lowest cost producer and will remain the lowest cost producer, so it will almost certainly be the last man standing in terms of hydrocarbon production. But there's also a powerful reason for the Kingdom, this is where I'm going with this, to invest in the new technologies. And Ludmer spoke about those 4 objectives for the B20. One of them was sustainability. Well, at the heart of sustainability is probably renewable energy. So I would have thought the Kingdom would start looking at a lot of technology around solar and renewables. Oh, and by the way, there is quite a lot of solar resource in the Kingdom as well. So it's going to invest in hydrocarbons. It's probably also going to invest in solar and renewables and technology as well.
Oh, absolutely. Absolutely. And this is really exactly the point I'm trying to make, especially on renewables. If the Kingdom is merely a taker of technology on renewables, it is going to be a loser.
Right.
What needs to be done is for the technology to be not only transferred here, but to be developed here. Just very much like SABIC has become one of the most advanced chemical companies in the world.
Right.
Why can it not be done on renewables? But this has to be done in many ways. I mean, maybe Saudi Arabia or the companies, the private companies in Saudi Arabia can buy Chinese companies, then transfer the Chinese technology to the Kingdom, even though the manufacturing may stay in China for that matter. So the key is the transfer of the technology to here and the development of the technology. SABIC now sells its technology. So why couldn't renewables develop it? If they're really, Saudi Arabia remains a taker of the technology, then it will eat up its reserves.
But technology is a very broad brand, because everything from FinTech and some of the really sharp stuff that's happening in the UK and other parts of the world, to renewable technology, to AI, related in some respects. In fact, there's one argument that FinTech and tech are merging, and the big tech players are moving into financial technology. But UK, being one of the leaders in FinTech, has got to be, in your role, one of the great advantages of trying to do deals and do more trade.
Very much so, and you're right. I mean, the tech is pervasive. I mean, there is no sector called tech.
Yeah.
I mean, every sector has tech within it, you know, and whether it be, you know, education. I mean, just look at the transformation of education, technology within education, and particularly as that evolves, and it's very relevant to golf. You know, education is evolving very much into, you know, vocational training and developing skills beyond primary and secondary education to tertiary. You look at the role that tech is playing in that transition already. So I think it's sort of dangerous to just think tech as a vertical that is a sector that needs to be addressed in isolation. It cuts across absolutely everything. And I think, you know, in looking at the competitive advantage of nations, we certainly feel that in the UK, across that tech space, we do have a competitive advantage. I mean, you look, just take FinTech, for example. I mean, behind the US and China, the UK is third in terms of the amount of venture capital that goes into FinTech, more than France and Germany combined. So it's a real strength but it pervades into other sectors, not just FinTech.
Yeah.
So I think that's when you sort of fast forward and you look at how trade is going to evolve. We tend to think of it as traditional goods and traditional services, but tech is very, very much that thread, which I think is going to drive and define what trade looks like.
Okay. Very happy to bring in the audience now for questions. We have one over there, so we'll bring a microphone. Just name an organisation, please, if you would mind.
Good morning.
Try that.
Good morning. Abdul Hajjaj from Standard Chartered. The issue that's, I guess, troubling many in the financial sector is rule setting and whose rule sets actually ensue. Over the past 2 years or maybe even longer, what we've seen, in essence, is a weaponization of the position of being a rule setter or a rule maker vis-a-vis being a rule taker. And to this extent, we are venturing into areas where there is such a level of secondary boycott provisions when it comes to international trade that companies have become almost an extension of foreign policy of many corporations. And this is fundamentally unsustainable. Now, would maybe Professor Jean-François was wondering, would China be moving down that path? Because clearly, the privileged position of the US as being the final rule maker is clearly being exploited in this regard, and it is having a fundamental impact on the way business is being done.
Well, I mean, you're opening a can of worms here. It could take forever to answer that, but one of the key issues is that the financial tech issues, as far as I know, and I'm not really an expert on the technical side of finance, but the larger institutions really control the market, and they control the market within a certain framework, and the framework is a very liberal way of looking at the currencies, how the currencies work. The US dollar is the main currency today in the world. Why? Because it's the only one that's truly freely convertible. The euro is one, but it's much smaller. So all the trade in the world is done in dollars. China could become a rule setter if China decided to open up its currency. The currency in China still is very controlled. And in fact, in my view, and I've written about that, really, it really hurts China more than it helps China, in the sense that because the Chinese currency is still controlled out of Beijing and is not freely convertible, the Chinese renminbi cannot be one of the main currencies of trading in the world. The day they become that, then all of a sudden the Shanghai crude market will take off. And the whole notion of paying for the oil in dollars will disappear slowly. So I think to be a rule setter is very important, but you can only do that if you abide by the existing rules today. And the existing rule is if you want to have a major financial importance in the world, you have to have a freely convertible currency in great part. And that's not going to happen in China for the time being, because I'm told by my Chinese friends that one of the problems is that the party in China doesn't want to lose control, which it could lose control if the currencies were freely convertible. So it's a very short answer to a very difficult question.
Yes, but if I may add to it, 2 facts and then 1 comment. The 2 facts are 80% of global trade is currently done in dollars, and it's a fact that sanctions are increasing. So, to your point, weaponization of the dollar, the value of the dollar is increasing. Those are 2 simple facts. You then go back to the prognosis that 70% of GDP growth, global growth, will come from emerging markets. You go back to double-digit growth every year, trade between the Middle East and Asia. So how sustainable is it that all of that's going to happen and to continue to be in dollars? I would suggest it's not. So you'll start to see some long-term trends there that will reverse some of those things.
And those are very much challenges to existing rules in existing sectors. And getting back onto tech, a whole new set of rules needs to be written for things like artificial intelligence. You look at driverless technology. I mean, the rules for that are not yet clearly defined. I mean, where do those rules get set, and how do they apply globally? Is a big challenge in terms of ethics. You could say the same for surgery. Seeing a lot more artificial intelligence in remote surgery. Where do the rules get set for those future technologies? So it's not just challenging the old world order of rules, it's actually creating a new world order of rules for technologies and industries of tomorrow.
And a big part of that is data, and David alluded to it earlier, the fact that we are likely to have different regimes around data, which could be an impediment to trade. And UK obviously an advocate of sort of open use of data, even though Europe has GDPR, which is one of the toughest regimes on data. So, what sort of impediment is that going to be in terms of digital trade?
Look, it's like looking into a crystal ball. But I think it's undeniable that data. Big data is driving so much innovation and creativity in the world today that I think it's very, very difficult to replace the use of data. So the rules and the ethics around using data will continue to evolve. I don't think you can put a lid on it and say the data is now contained and can't be used for future innovation. We're at the beginning of this journey, really, and I think part of it is trying to grapple with the ethics around it. But that doesn't mean that GDPR is the end of it. It's just one mechanism on a long journey.
Okay, next question, please. One at the back, please.
Great discussion. So my name is Rida Sabuni with the Clean Energy Consultancy, Energetics. On the clean energy topic, actually, I'm curious what your thoughts are. I'm very happy to see Saudi Arabia is taking great steps to develop a clean energy industry within the kingdom. But I'm curious on your thoughts on what the appropriate role of the government, tips for them to take, a role of finance perhaps, and the private sector. Keeping in mind things like Silicon Valley did not emerge, snap of the fingers overnight. There are other things that need to happen. So how do you establish a clean energy ecosystem within Saudi Arabia to make it a global powerhouse in the topic? Thank you.
Okay. We'll start with you, but then we want the finance sector. Please.
Well, I don't really have an answer, honestly. This is sort of a new approach in the kingdom, and the conference that's taking place today on clean renewable energies and all that in another hotel is quite interesting about that. I think there's an effort by Saudi Arabia because of the G20 to show that they're at the forefront of this kind of thought. The results are not there yet, but definitely there are major efforts to try to establish new technologies which will be based here, which will help in the cleanup of the carbon problems. It's not simple. I think one of the issues would be to certainly bring in the private sector, and it was very interesting to see that there are private companies here like Aqua who basically really are at the forefront of the renewables worldwide. And that's a very big plus. What's less of a big plus, in my opinion, is that Aqua was just received an enormous amount of capital from the Public Investment Fund, which means that it's not truly longer a private company. So we'll see how that develops. But the private companies, by and large, could be involved, and they can be because it's profitable. And if they're willing to put the capital in it, they will be able to do it. There's an enormous market, especially in the renewable and the technology of renewables. So we'll see how this develops. We need some more Aquas, if you like, in the kingdom, but truly privately owned.
We are going to be looking at that later in the final panel. We have some experts on renewables and the rise of renewable energy, and look at you, because there are issues around partnerships versus tendering, all those sorts of issues we're going to delve into a little later. But I do want to talk about the role of the finance sector in sustainability.
I hope we're not taking all the material away from the sustainability discussion.
Not at all. There's plenty of
I mean, this is a critical discussion. It's absolutely critical. And again, as Malaine said this morning, she mentions sustainability as one of the key factors or programs that the B20 is looking to recommend to global leaders, and I think that is absolutely correct. I can tell you that we have a lot of action with government authorities in the kingdom, ministers, etc., and hardly any discussion takes place today without the word sustainability being mentioned, hardly any. And I think the finance industry has a huge role to play in this. Our bank is going to embark on a new strategic planning exercise this year. I've got no doubt whatsoever that an important component of our strategic plan will be ESG, environment, sustainability, governance. I've got no doubt at all. And I think all of us, in our own ways, are thinking about these issues because they're serious issues and how we're going to adapt and manage and react to these issues. Green finance is an important area, but it's not enough. And how green is going from dark brown to light brown good for green, or is that still not good enough? Are we trying to eradicate all brown and get entirely to green? So finance has got a role in all of this, and you will see more green financing, more green bonds. They will come in Saudi Arabia, etc., etc. But I think we need a much broader global agenda, actually. We need a global agenda, we need a national agenda, we need a private sector agenda, we need a company agenda, we need an individual agenda. It's a fundamentally important subject.
Okay.
Yeah, I mean, I guess the question was also around the sort of the role of government in all of this, and I'll give an example around the sort of the future of transportation and electric vehicles. So, you know, in the UK today, for example, we've got sort of low hundred thousands in terms of numbers of electric vehicles. The UK's announced that it will be banning or stopping the production of petrol and diesel cars by 2032, which is 12 years from now. It's not that long away. Projected growth of electronic vehicles goes from those low hundred thousands up to 11 million by 2030 and 37 million by 2050. There's going to be an explosion in the use of electronic vehicles, which comes with it. Where does the energy come from? And how do you get that energy from source to car? And one such area we in the UK, I mean, partly huge focus on renewable energy and particularly wind investment there, but also putting in place a global network of electronic vehicle charging points.
There's infrastructure.
The infrastructure is huge.
Plug the car in.
And I mention it because this is exportable. This is not, when I get back to sort of working in partnership with countries like Saudi Arabia, these are not unique problems for the UK, electronic vehicles, zero carbon infrastructure. So a lot of the innovation and technology and investment that's going into that is happening around the world, and it's happening here in Saudi. So I think the whole evolution you were talking about earlier on, investing in, David, you were saying about sort of moving away from hydrocarbons to renewable. It's all part of a big global picture. It's not a unique thing to Saudi or any one particular country. But one thing is absolutely clear, is the direction of travel is very much more towards that net zero. And it's been driven not by governments as much, it's been driven by people. You know, people are driving this change. I go a lot around the region, and we speak with a lot of the sovereign wealth funds. They have a very important role to play in this because sovereign wealth funds can drive this change as well in terms of where they deploy their capital.
There's huge investor pieces.
Investor demand. Investors will drive change. It's not just sovereign wealth funds, it's people and individuals. And I think there's just a global movement in that direction, and we either have to get with it or we will get left behind, and that's true as countries and as companies. If companies don't buy into the ESG, as David said, they will get disinvested over the long term.
Okay. Look, we're just about out of time, but I do want to bring it now down to very much to Saudi Arabia, Vision 2030, and the role of Saudi Arabia will play in regional trade and global trade. And David, I want to start with you. There's part of 2030 is diversifying the economy, which is an essential piece of that. And I assume an essential piece of that too is to develop goods, services to export. How ambitious are the plans, and how will that transform Saudi as a player in global trade?
Well, I think we all know the plans are very ambitious, and rightly so. And I think one of the most positive changes that I've seen in the kingdom, amongst many, but one of the most positive, there was perhaps for a long time a fear of failing. And so targets were set pretty low, so you could almost guarantee that they would be met. And talking now, at the national level. Now we've got an environment where much more ambitious targets are set, and it's okay, and in fact almost expected, not to meet all of them because they are so ambitious. But actually, if you reach 50% of a hugely ambitious target, that's better than going along and sort of achieving 100% of a really low target. So the targets that the kingdom has set itself is incredibly ambitious. I think the diversification is real. The path is real. To use the word sustainable again, it is absolutely sustainable because all of the right steps are being put in place. The right foundations are being laid. Is it taking time, rather like the question you asked in terms of trade technology? Yes, it's taking time, but it is because it's difficult. This is a very, very significant transformation. Almost all the old rules of doing business, of engaging, of the economy have been thrown out of the window, and we've set ourselves a new set of rules. But I have no doubt that it's real, and as a result of that, you will start to see growth levels rising, you will see trade levels rising, you will see regional trade rising with Saudi Arabia at its heart, you will see trade between the regions, and we've spoken a lot about Asia and the Middle East rising and increasing, and I think you will see Saudi Arabia playing an ever more significant part in that growth.
Jean-François, do you agree?
Oh yes, I think one of the thing that's most important and that helps the Vision 2030 is the Saudi youth. I've been very privileged to teach many Saudi students in my many years as a professor, and I'm absolutely amazed by their entrepreneurial spirit. The young people want to start things. Every one of my students wanted to start a company and become a new Orleans. But it's really quite amazing, and I think there has been some efforts in their Vision 2030, the JADA GADA experience of trying to bring money to these entrepreneurs. I think will be very helpful. But the corollary to this is that these companies these young people will be successful if they go from where the kingdom has a natural advantage, and hence my repeating the idea of going where you have the cheap advantage of the cheap carbon molecules and a lot of capital, and the services related to that. So I think we will see some major changes. I think okay, they may not achieve the whole of Vision 2030, but I'm a little more concerned about very big plans of new cities and things of this nature. But if you give the youth the ability to operate, and this is happening, I think we will be very positive altogether.
So in the final word to you, the UK, is Middle East and certainly a particular priority for the UK, and do you see the UK partnering with some of these very ambitious plans for 2030?
Very much so. I mean, as I sort of alluded to it earlier, but just to sort of put some complexion on that, and then sort of outside of the European Union, so sort of in a post-Brexit, if you remove the European Union from the following statistic, the Gulf is the UK's second largest export market globally, behind the US only. I mean, today the UK exports more to the Gulf than it does to China, and more than 3 times than we do to India. So the Gulf is already a very, very important trading partner to us. As I said, against that backdrop, the world is changing, and how we respond to that will define UK's role as a partner to the Gulf going forward. I mean, I would just add, to your question about Vision 2030, as the economy diversifies and more private sector companies emerge and SMEs emerge, one of the biggest challenges that the companies will have is access to finance, and that's very much in terms of supporting Saudi companies exporting. As more Saudi companies are created in more industries and they start exporting, the need for trade finance, export credit agencies, Exim banks, UK has its UK Export Finance, and we're absolutely clear that UK Export Finance helps UK companies not only take the risk out of exporting, which is a very, very big risk for SMEs, but also it provides funding to entities that want to buy UK products. And Saudi has that very, very real opportunity at this beginning of the journey as the economy diversifies to put in place that framework to support financing structures as well. So, yeah, I think this region is going to be important, and that partnership around finance and bilateral trade in both directions is going to be at the heart of that future trading relationship.
Tremendous. Look, I'm afraid we are out of time. Ladies and gentlemen, please thank my panelists, David Yu, Simon Penney, and Jean-François.